Good morning, afternoon, or evening, ladies and gentlemen, depending on where you're joining us from across the world. Welcome. Welcome to a Payments, Cards and Mobile webinar in association with Icon. I'm Alex Rolfe. I'm the Managing Director of Payments, Cards and Mobile, and I'll be hosting the webinar today. From myself and all the panelists, I hope you're all doing well and coping with whatever version of lockdown you are currently in. A few housekeeping items before we get started, please. If you experience any technical difficulties with sound or visual, please use the user interface to ask for help, and one of the team will be with you right away. Number two, this is a live event, and we'll have a live Q&A session at the end. However, please do feel free to send your questions in as we go along. If your question relates to a specific topic, because we're going to talk through certain topics as we go along today, please note down that topic in the question so we can quickly reference back to that whilst answering the question. This webinar will contain two separate polls coming during the data section and the alternative payment section, and we strongly encourage you to participate with those. Findings will be shared during the duration of the webinar, and we'll also be having a brief discussion about the findings. And finally, all assets regarding this event will be made available at the end of the show, meaning you can share with colleagues or review the information again at your leisure. Okay, So let's begin. Okay, as we're able to take stock of the last 12 months or so, I think it's been pretty well documented there has been a terrific shift to digital. Thankfully, for the majority of us in the payments industry, this has had a positive effect on our businesses. But as more and more people move online, we're seeing new competitive battlefronts open up. One example of this is for incumbent banks, which have for a long period enjoyed a leadership position in the payments business and enjoyed high fees, healthy margins, and limited competition. But as we've seen, payments ecosystem is expanding, and these incumbents now find themselves competing on multiple fronts. With increased competition from card networks, payments platforms, challenger banks, and big tech, the market share of banks on the global payments industry has reduced from 96% in 2010 to 72% today, and competition is only getting fiercer. So the basis of the webinar today is to address this competitive landscape, discuss how the ability to improve data-driven propositions, promote trust, reduce cost, realize scale advantages, drive innovation, and support alternative payments rails could improve the difference between staying ahead or falling behind. And here to walk you through these topics are three gentlemen who are all experts in their field and the subject matters. I'd like to introduce Simon Wilson, who's co-head of payments at Icon Solutions, Jim Wadsworth, Senior Vice President, Open Banking at MasterCard, and Lee McNabb, Payment Strategy and Research at NatWest Bank. Gents, welcome. We're not going to waste any time. We've got about 57 minutes and we've got an awful lot to get through. So, as I said, we're going to talk around subject in topics. And the first topic is kind of the landscape now. So, Lee, from the perspective of the banks, because we've referenced the incumbents there, you know, the landscape for competing in payments has changed significantly, as we pointed out in the last 10 or so years, but more quickly recently. New entrants are gaining ground rapidly, and the strategies to compete are increasingly congested and complex around the ecosystem. And this is raising lots of different questions. So I think the starting point here is, what does competing in payments mean for you now? And what do you think has significantly changed in the last 5 years?
So thank you, Alex. Good afternoon, all. Thank you for having me and thanks for watching. Do you know what? There's multiple ways I can answer this one. And what does competing in payments mean? Means many things, but I guess the simple line is that competition is as rife and as powerful as it's ever been. And some of the stats you kind of read out at the beginning are quite sobering, coming from an incumbent bank, but are actually the facts. What I will say is, from a core industry drivers perspective, they've actually remained the same. So our technology continues to advance. Customer needs and expectations continue to move on and be set by those non-financial service providers. The regulatory landscape doesn't change, doesn't abate. And for us as a kind of scale provider, we feel that quite keenly. And then those in turn all drive competition. I think if I look at it from an incumbent bank perspective, what's really changed is that we've probably now woken up to the fact that payments are seen as that gateway product for customers. So no longer like simply a service of a current account, And this is across retail and commercial bank. And the last 5 years have just been so intense, but they've had to be to drive on our position in the market, to drive on that customer expectation. The fintech market continues to drive that need for us to evolve. I mean, depending who you read, it's something like 40 or 50% of fintechs start up and they're in payments, and they're no longer just in the front end of payments, in the user experience bit. They're now across all elements of the value chain, whether it be the wallets, the PayPals of the world over the last 5 to 10 years, continuing now to see buy now, pay later and fintech brands growing more and more in prominence. But we're now seeing this in the tech stack. I mean, and Simon will touch on this no doubt and sees it more than us, but that increasing disintermediational threat is coming at us from all different angles. But I guess to end there, we have to welcome that competition. It kind of reminds us that customers can kind of fire us at any time, right, by moving their business elsewhere. And it helps us to drive, and we'll come on to innovation, it helps us to drive the need for that culture of innovation and change.
Sure. Thanks, Lee. Jim, I guess, you know, from the perspective of MasterCard, you know, they've changed their, well, not changed their business model, but they've moved from being very supportive of the banks and now offering some kind of competitive products to the banks. So how do you see that landscape right now?
Yeah, thanks, Alex. I mean, I think the first thing I'll say is that MasterCard, you know, is and continues to be, you know, we'd like to think a very important partner of the banks, and that is absolutely our focus. But I think more broadly, you know, payments has always been an exciting place, and you know, I guess those of us who have been kind of doing payments for however long would think that. But it's definitely the most vibrant time I remember in my working life, with so much innovation happening, so many new competitors, as Lee was saying, arriving in all sorts of parts of the value chain, not just in person to merchant, of course, either, but also in all forms of payment, be that B2B, person to person. We've just seen some, you know, some interesting announcements here in the UK in the person to government space. But I think, you know, the biggest, if I look kind of globally, the biggest strategic change in payments over the last few years has been the combination of the rise of real-time account to account. In the UK, we've had faster payments for, you know, approaching 15 years now. It's amazing to think it's that long. But around the world, all sorts of countries and regions are adopting real-time account to account. I was looking at some statistics from Brazil just recently. Their PIX service launched only a few months ago, and in terms of penetration of that into just as measured by customer usage, it's just amazing how quickly it's taking hold. So real-time account to account is one big trend. The other big trend, one that obviously is near to my heart, given my role in MasterCard, is the rise of open banking. And if you look at India with its UPI service, you can argue that's an open banking service. I certainly would. You know, you've got 150, 200 million Indian citizens at least now routinely engaging in that service. You know, billions transacting on a monthly basis. And in a very small number of years, it's become a fundamental part of the payments landscape in India. You know, in Europe, we're just starting to see open banking payments, really start to take hold. And the intersection, we think, of real-time account to account and open banking is really important. It's a big area of focus for us. We can see that in all sorts of countries around the world, you know, just starting now. And so if we think the last kind of 5 years have been frenetic in terms of competition, yeah, I think it's going to get way more exciting over the next 5.
Thanks, Jim. So Simon, I guess you will have a different perspective from a solution provider point of view. What are your thoughts on competition and the landscape as it stands today?
Yeah, thanks, Alex. I think I'd build on a lot of what Lee and Jim have said. You know, we provide technology solutions for payments to all of those providers effectively. And we see a number of things coming from clients in terms of what they're looking to do to try and serve their customers. As Jim said, real time has been probably, along with open banking, one of the biggest changes in the last 5 years for sure. There is still a lot of transaction volume to move to that kind of environment, of course. But the expectations of our clients are very much around everything being real time. And that's not just the payment in terms of shifting the money from A to B. That is about the data and what comes with that payment as well. And I know we'll go on to talk about that. I think that competition is reflected in actually the concern people have over the pressure on both revenue and therefore margins and therefore a cost base. And from a technology perspective, our clients are looking for ways to become more innovative and more responsive to that competitive environment, but actually really drive down costs as well. Because you've got a scenario where expectations are growing, volumes are growing hugely through that whole process of digitalization. You want to be able to respond to the competitive threat much more quickly and easily, but you've got a big cost base and often, particularly in terms of those incumbents, a legacy kind of cost base which inhibits much of that from a technology perspective. And I think the other change that I would reflect on, which is perhaps more recent and slightly more forward-looking, is particularly in the corporate world, it is about giving clients more control over the way they interact with payments, the way they undertake payments, how they want to do that, when they want to do that, when they want to receive money, in what currency, perhaps even non-fiat currencies and things like that. So it is about our customers looking to give their customers more and more control and customization and individualization through the solutions that they offer and that they build on our technology ultimately.
Thanks, Simon. Jim, I think you wanted to add something there?
Yeah, I think just building on that last point Simon made, the landscape is becoming ever more complex for our customers and for their customers. And I think one of the really important responses that all providers in the value chain need to think about is how to help our collective set of customers make sense of that complexity and the various choices. Because in the end, particularly when you think about consumers making a payment, if they've got a choice between something intuitive, simple, that works, or something where they've got to think about it, it's fairly obvious which option they're going to take. So it's so important in this new world with so many different choices that payments partners, if you like, simplify things for their customers and more importantly for their customers. UX is critical, but also, and we'll come on to it, I know, things like safety, trust, fraud protections, all those sorts of things as well.
Yeah, thanks, Jim. I think that's actually an interesting point you raised there, which is that while we're talking about competition, there does seem to be an extraordinary amount of partnerships as well between groups that you might have thought would naturally compete with each other, but actually are making those partnerships. So yeah, competition might breed more partnerships as well. Okay, so we're going to move on, and this is time for the first poll. So ladies and gentlemen, I'm going to ask the poll and post it. It should arrive, and hopefully you can see that. I'm not sure if I can move that. I can't. So we're going to go through the second topic, which is around data. And I'm going to kick off with Simon here. So Simon, I think we're going to just talk a little bit about, how much data there is, and specifically the contextual data and ISO 20022, and how that enhances data further. How can players make that? How can they make the data transition to revenue? How do you see that working out in the next year or 3 years?
Yeah, that's a key point in terms of how people really start to monetize, I think is the phrase that I've often heard talking with clients, that data. there is clearly an increase in investment. We're about to release some survey results. I'm not allowed to talk too much detail in terms of spoilers, but the investment of banks generally in the monetization of payments data is interestingly doubled this year from what it was last year. And that demand really is coming from corporates, but I think they're also doing that because of the regulatory changes around ISO 20022 and everything moving there. The challenge that we see for clients is really moving those projects from a compliance kind of regulatory push and just transforming the data to actually making it practically useful to both them to improve internal processes, but most importantly to add value to clients and therefore start to move those margins around the services offered from payments in a more positive direction to the erosion of purely execution margins around payments. There are constraints and real challenges around that. I mean, there's budget and resource, but just getting your data organised, particularly when you're in a big bank, there is no shortage, to your point, Alex, of data. If anything, there's too much. It's not always of the same standard. It'll be in a variety of formats, and even when you move it to ISO 20022, when you look at things globally, there's a diversion of standards within ISO 20022 as well. And of course, when you just transform the data rather than transform some of your core systems to an ISO 20022 format, there's always the risk and danger of losing data, and there's the challenge of gluing it back together in a seamless fashion for customers at the other end. But I think it does provide a huge opportunity. That research I referred to earlier not only looked at what banks were doing, but also look at what their customers from a corporate perspective are wanting. And they want help with that regulatory compliance. High on the agenda are things like security and fraud, as Jim mentioned, and actually leveraging data insight to improve those areas is a real opportunity. But also, core corporate services. There are still huge swathes of corporates that are not able to get real-time cash balances or real-time cash forecasting on the back of that as well. I think it was a McKinsey study that drew to the conclusion there was a potential for corporates to actually drive 10% worth of revenue growth effectively through far better cash forecasting, and in a real-time world compared with much better data around the payment flows, around order to cash and procure to pay kind of cycles. That's where treasurers can get a lot of value in understanding the flow of their business and actually being supported as a partner by banks and others that they are working with to really enhance their business rather than just help them move money around. And I think that's the opportunity for all the players, and that's also why we're seeing the level of competition, because it also helps those treasurers and corporates really reconcile and improve workflows and straight through processing at their ends as well. But operationally, there's a huge cost there.
Thank you. Thank you.
Can I add?
Yeah, Leo, I was going to say from the bank perspective, how easy is it to do this stuff?
And if you see me jump up, one of the downsides of working in a converted shed is that it tends to invite the bugs and the bees. And I just had the biggest wasp coming into the shed. So if you saw me stand up, I was opening the door to try and usher it out. It sounds like a small Apache helicopter, but anyway. So two things for me. From an ISO perspective, there's arguably the step before, and Simon kind of touched on it there. Yes, we need to get ready for it. Yes, it's a huge mandated change. Yes, our customers need to be ready for it, especially in the kind of corporate space. And it isn't just a tech bit, it's about skills, appetite, culture, understanding what it actually means. But for me, from an incumbent perspective, there's a bit before that. We've been sat on this data for years. And what we need to do is utilize it better. We need to have that culture of how we can use our data for customer outcome benefit. And I arguably call it the marketplace. We have a huge retail scale. We have a huge corporate and commercial scale. And Simon's right in that they're coming at it from a corporate perspective. But what if we could use the insight we have from our retail base to help form a better understanding for our corporate customers? And that's the kind of thing we're doing now. We've completely changed the way we kind of look at data, which arguably sounds a bit late, but it's reality we're in. Our chief data officer now is not from a banking background. It's actually from EA Sports. that has that real focus on how do we commercialize data and treat data as a strategic asset. So it isn't just words. We've spoken about data for eons, right? And we always kind of talk, yeah, we've got all this gold and oil, whatever we want to call it. But do we actually do anything with it? And so for me, it's about getting ready for ISO by utilizing the data we have now. And then I think we'll be in a better position to maximize the benefit that ISO will bring. But to answer your question, Alex, it's going to be a difficult kind of challenge just to meet that mandated change. To be fair, it's a huge task.
Thanks, Lee. And Jim, I'm going to come to you, but first I just want to close the poll so that while it's doing that, we can see what the perspective is. So I'm hoping, and right, good. So Jim, yeah, sorry, he's smiling at me there. Shall I try to get this across to everyone?
Yeah,
right.
I mean, while you're doing that, just a couple of words, I suppose. I mean, so yeah, I mean, obviously you recognise, what Lee was saying in terms of incumbents having this wealth of data. I guess one of the things that, again, coming back to the open banking topic, it's done. It's frankly forced open access to that data. It's we would kind of see it as a big democratization move in some ways. But at the same time, incumbents, just as much as new players, can absolutely benefit from that. We acquired a business in the States called Finicity towards the end of last year. That transaction closed. They're an open banking enabler in the US market, but one of the things they do is help banks make lending decisions by leveraging the data that comes from whichever transactional accounts that customers happen to be making use of. And of course, many customers are multi-bank. And so Finicity is brilliant at taking that data that comes out of things like payments interactions to help to understand better customers' creditworthiness. And very large numbers of things like home loan remortgages last year in the States. The volumes of that have been very high given historically low base rates. A very large proportion of those lending decisions were in some way informed through the use of data derived from people's bank accounts. And that's a great example of use of that data for the benefit of individuals, for businesses, for lenders, of course, in terms of driving more business, and ultimately for economies as a whole.
Thanks, Jim. Okay, so the results are now being published to the audience. I'm going to read out the answers for you because I think the question we asked was, does your organization plan to leverage payments data to deliver value-added payment services? And then there were 4 answers, and overwhelmingly we have 43% basically said don't know or it's not applicable. And the next biggest was 32%, yes, we plan to do this in 12 months or so. So any thoughts around, I guess, the 2 big numbers? The other big number, by the way, I should tell you, is 21% of the audience said, yes, we're already doing this. And no was a tiny amount, something like just over 2%. So I don't know if there's any insights or perhaps we know what we know now and we move on to the next section.
Yeah. For me, it's yes, we're doing it now, and yes, we plan to do more in the next 12 months. Okay.
So it seems to me there's quite a lot, or from the audience perspective, there's quite a lot. Nearly 15% don't know, or it's not applicable. So I think that could be a key takeaway. Perhaps there'll be some questions on that at the end. All right. So we've covered off data.
A lot of those. Sorry, Alex. I suspect a lot of those don't knows are really not yet, but I think it's kind of inevitable for most players in the market in some shape or form.
Okay, thanks, Jim. All right, Jim, we're going to stick with you. We're moving on to the next topic of trust, and I think the starting point is from an established player point of view, there's a consideration that you have an edge over the competition, which may or may not feel like it's true to you. But what can you do to maintain that advantage?
Yeah, we did a piece of global research towards the end of last year, actually, across about, 15 markets or so from memory, all around the world, both developed and developing markets, amongst both consumers and business customers. And one of the questions we asked was about essentially who do those players trust most for getting services, particularly new services like open banking. And regardless of which country you're looking at, a very strong response, in the high 70s in most cases, and in some one or two cases even above that. The entity that people said they trusted most from where to get those services are the incumbent banks. That didn't mean necessarily they didn't trust fintechs or other providers, but the most trusted absolutely were the incumbents. And I think, from a bank's perspective, therefore, firstly, that's kind of good news. So it's all really about capitalizing and maintaining that position ultimately by providing the services that their customers want and need. And I think part of that's going to be about, as you mentioned earlier, Alex, partnering with the right fintechs in the right way. And we've seen some great examples where in the background, we know that actually the service is being manufactured by a more nimble, should we say, fleet of foot fintech, but it's got the bank brand on the front. It's the bank that's presenting the offer to the customer, leveraging that trust relationship, but quietly in the background, leveraging the expertise of the perhaps more nimble fintech. And I think that's a hugely important thing for banks to be thinking about. With all due respect, and I know what it's like to kind of get an incumbent to do things, but it's often easier to partner in some respects. But I think there's also a message for the newer players who have ambitions to become the primary provider of service. They have got to overcome that trust barrier, and that will come through. It's hard won. It's easy to lose, and it's hard to win, as banks know. So being really transparent with customers that they're seeking to do business with, really transparent about things like what are they doing with your data. When things go wrong, making sure that service recovery is just exceptional and that there aren't issues like, on the blogosphere, people whinging about the lousy customer service from brand X when something's gone wrong. So there are some great opportunities for the incumbents to continue to maintain that trust position, but they also can't afford to be complacent because the newer players will over time seek to emulate that.
Thanks, Jim. Simon, I know you've got something to add, but just while we're on incumbents, I think I'll just go to Lee quickly because I'm sure he's smiling already and he's managed to kick out another bee, so we'd better let him have a chat.
It's the dogs next door now that are going ballistic, so I had to shut the door again, so I'm going to heat up gradually. But I think Jim covers it kind of perfectly there. And I think from a trust perspective, for us, from an incumbent, it's not kind of a given. And I think the most important point is we can't take it for granted. And any competitive advantage that we may or may not get from it is arguably quite fragile and a non-permanent advantage. The pandemic, if anything, has almost reinforced a bit of the trust that waves up and down from a big bank perspective. But what trust does do, it brings an added element of responsibility. And I think Jim kind of covered it there with, if you do something wrong, make sure you rectify it and do it transparently. We've got to be trusted to do the right thing by our full range of customers. And that does actually make it quite difficult because, and we'll come on to this in the scale piece, but we've got millions that are digitally active, but equally across the UK, we've got millions of customers who still use kind of cash and checks as an example. So we have an equal responsibility to be trusted to them as well. I mean, we do over 1 in 4 payments in the UK, but that drives a need to ensure that every payment matters because it has to, because it brings with it systemic risk to the overall UK PLC. So that trust is an added layer and layer responsibility. But if we link that into what we do from our purpose perspective and that purpose agenda, hopefully that comes with additional credit from a trust perspective. And it's what we can leverage from that to meet customer needs and improve our overall kind of proposition.
Thanks, Lee. So Simon, sorry to keep you, but go for it.
Yeah, sure. No, and I think it's really interesting because I do think there's a very dominant trust there in the existing players, and as Jim said, it takes a long time to build that up. It's easy to break. But if you look at some of the more recent benchmarks and where they're coming from, whether it was Starling being first out of the go to offer a card, a second card usage in it to help people who were quarantined during the pandemic, for example, or you look at Monzo's response to service issues that they have, and Lee, you mentioned transparency. The way they transparently publicise exactly what went wrong and how they're dealing with it to all of their customers publicly, it's really interesting. I think it takes a long time to make a shift, but one of the other things that's going to shift over the next decade is where the wealth sits. And the comfort that the Gen X and the Gen Z particularly find in the new players, and the fact that wealth will shift over the next decade or so to those generations, and what they then do with that wealth from a banking perspective is going to be really interesting, because the new players don't have that same level of accountability that you rightly talked about, Lee, to that breadth of market. They can afford to be and have grown up being more focused. So there isn't an easy answer, but there's a lot of challenges there to get through. And of course, the new players have the advantage of more modern technology. Can they keep it modern? And can the old guard, as it were, kind of get away from the legacy technology and almost leapfrog, making use of the new technology? That's clearly what they're trying to do, and there's some great efforts out there doing that. But it is just a challenge of being an incumbent.
Simon, just staying with you quickly. I mean, we've discussed trust and data. One of the points that we wanted to make was around data privacy. You know, that feels like a big beast coming down the line. From the perspective of servicing your clients, what's the general view on data privacy at the moment? Is it an issue, or is it something that they're sort of it's coming, but we don't need to worry about it too much?
Well, I think from a security perspective, it's very much top of everyone's mind. And I think banks have done a fantastic job. And in fact, if anything, they haven't leveraged it well enough in terms of managing that data compared to other places that have had issues. I think there's a big role here for the regulator, actually, because as consumers, I think sometimes we feel torn between, there's this open banking stuff you can make use of, but watch out, everyone's trying to scam you. So try to get the balance right from an education perspective there, I think is pretty hard. And I still recall a couple of years ago now, but the Dutch regulator rapping the knuckles of the big Dutch banks for using with their permission customers' data to try and sell them things, which is kind of almost feels like a conflict with what PSD2 and open banking is supposed to be doing. So the privacy is really always important. I think it's about putting the tools in place to allow an individual customer or a corporate customer of any kind to manage and really easily, removing the friction, own how they want that data used and make it really clear. And doing that in the right way and in a safe way is the real challenge.
Cool. Thank you, Simon. Okay, so we're going to move on to alternative payments, and that means poll number 2. So audience at the ready. Okay, we've launched the poll. So Jim, from the alternative payments perspective, let's discuss adoption of alternative payment methods, the acceleration of alternative payments, possibly due to COVID, but I think it was definitely on the way in a lot of markets. And I think what kind of opportunities does that raise around moving away from traditional rails?
Yeah, I mean, I think a number of different questions in that. I mean, maybe just picking up on the rails point first, if I may. MasterCard has long since kind of repositioned itself as a quote-unquote multi-rail payments technology provider. I guess the most obvious examples of that being the acquisitions of Vocalink in 2016, which is how I personally joined the MasterCard family, and more recently, just closed in the last few weeks, the acquisition of the account-to-account assets of Nets. I think that's a clear statement which says that yes, absolutely, we love cards and we want to add as much value to card transactions as we possibly can for our clients and their customers. But equally, we think that account-to-account is hugely important, and so we obviously, we're very, in the privileged and very responsible position of running account-to-account infrastructure in the UK, but now many other countries around the world as well. And so from a Rails perspective, it's very clearly a multi-rail view of life. And indeed, we're also, investing in things like blockchain-related technologies and so on for a similar basis, because ultimately our customers and their customers want to take advantage of an increasingly broad range of tools. And clearly, we're not the only player doing that. There is lots of investment and innovation going on around the world, both by incumbent organizations and, of course, by new entrants. And, some of that you can probably define as alternative payments or whatever else. I guess the point is there, again, going back to what we said earlier, increasing numbers of ways for transactions to be facilitated. And they have their different merits, different payers and payees, to use that language, or a different combination of payer and payee might use, facing the same underlying transaction. One combination might prefer one method over another. And that's cool, because ultimately that's competition, that's choice. And as providers, we need to respond to that challenge. It creates opportunities for competition. It creates opportunities for new types of services to be created. And, we've seen what's happened, for example, with, the rise of the Asian giants, massive businesses that, are founded on what was kind of, I suppose, deemed to be an alternative payment method. Hugely exciting and, sometimes also a bit scary from the perspective of an industry participant. But, customers at the end of the day are going to benefit.
Okay, Lee, opportunity or scary?
Oh, opportunity, a scary one. So I guess a couple of things. I mean, we could be sat here feasibly in 10 to 15 years. I mean, we won't be talking about Rails because there might just be one. I mean, the convergence of payments has arguably already happened, and I think will continue to happen. I mean, we have quite a positive story, like Jim, to be fair, from a open banking perspective. We kind of saw the regulation that was coming and the opportunity, to use your phrase, Alex, that it kind of brought. So we have a live open banking payment proposition. We have it live with merchants now, because we recognize that there's an element of change that's already happening and will continue to happen. Has it been the big bang that people may have expected? No. Will it kind of grow organically? Yes, I think it will, as different use cases become more evident. I think the HMRC adopted an open banking solution as a bit of a game changer. So I genuinely think that it's a real opportunity for us, and it was one that will continue to grow and grow. And then who knows where it'll go with that broader convergence of payments.
Thanks, Lee. Right, so I think we'll do some poll results. Gather poll results. Continue. Okay, so the question that we posed, just for the panelists, in 2020, there were over 779 billion digital transactions worldwide. By 2023, this is forecast to be 1.1 trillion, with digital wallets such as PayPal and Apple Pay comprising 47% of global online transactions. When do you expect digital transactions to become the majority? And the answers were this year, next year, 2023, 2024, or never. So let's have a look at what we have here. This year, interestingly, only 3% thought that it would overtake this year. 2022 was 21% of people. In 2023 was 24% of people. And never, interestingly enough, was the biggest majority of 51.5%. Simon, any comments on that at all? That's quite an interesting one for me.
Yes, I'm surprised by the never. Personally, for me, I would have put it at next year if I'd had the chance to press the button. So yeah, I think it's just a direction that I personally see as unstoppable in that sense. Being more than 50% doesn't mean it's going to be 100%. Big difference between those two things, but that's the thing that surprises me, Alex.
Okay, let's stay with you, please, Simon. We're going to move on to the next topic. So we've got about 20 minutes left, and we do want to taking some of the audience queries. So innovation, that we've talked a lot about the move towards platform business. We've touched a little bit on big tech and payment platform providers, obviously. So how do you feel that the established players can respond to these emerging trends and build new value-added products and services?
So I think the trend we're seeing, talking with those kind of clients, and Lee can come back as talking as one of them in that sense, but he's very much, trying to break down the traditional transaction silos. Not a new concept, has been going on for a while, but really seeing the end-to-end process for clients. What's interesting is the needs of that end-to-end process, because of the emerging digital economy over the last years. If you look at the platform economy specifically, is really driving new requirements. So if you take a platform business like an Airbnb, for example, actually the payments flows that are needed to be provided to service them are quite complex and quite different. They take money in for a deposit, they take money in for a full payment, they keep some of it, they push some of it back out to the house owner. They might need to provide a refund. They might also pay for the service of that flat that the owner pays Airbnb to sort out. The FX might be involved for people coming from abroad. The number of things that have to happen in that payment chain, which is not part of Airbnb's core business and they don't want the hassle of, provides tremendous opportunity for banks or fintechs to assist in smoothing that whole kind of flow out. In the same way, I think it's innovation is about allowing clients in a controlled, safe manner to be innovative themselves. If you're a developer on an app store, globally, do you want a £2.50 payment every time you sell an app? No, you don't. You want it on a Friday. You want it in a single currency, and you want it consolidated with a decent report of where it's come from off the back of it. Actually facilitating all of that stuff, but putting a client in control of whether they want it on a Friday, weekly, or monthly, or a Wednesday, or whatever it might be, is really key. And I think that's where banks are looking to try and be innovative and put their clients more and more in control. The other area I think is really quite hot that we're seeing and involved in doing a variety of work around is the kind of alternative payments in terms of digital wallets and things like that. There's over a billion people worldwide using digital wallets now. Even in the UK, it's 24%. Now, traditional things might sit behind them, but increasingly non-traditional things are part of that ecosystem. Whether it's Fiat announcing they're going to reward their drivers for driving greenly with cryptocurrency, or whether it's PayPal offering the facility to pay by Bitcoin, managing the conversion and still sending pounds or dollars to the merchant. Actually, we're moving to a new era of value being stored in different forms than just what we'd call traditional fiat currencies. And where banks or financial services players sit in terms of their role of managing that value is going to get really interesting. It is the newer players who are allowing clients to have their bank account and as part of it or next to it hold Bitcoin. But why does it end in cryptocurrencies? What about if I want to swap my Avios for real money or other reward points and things like that we're not even thinking of yet? I think those areas of innovation and obviously the technology demands to facilitate those and serve customers that we're seeing is really interesting and will continue to evolve, but quite rapidly, I would anticipate, over the next few years.
Thanks, Simon. So I think quite interesting, and we've got some queries from the auditorium, so I'm going to try and float them in where I feel it's appropriate to the topic, and this one happens to fit. So do the panel believe in time fintechs will take market share, or will they be absorbed by the large incumbent banks to deliver open banking propositions? I think let's just maybe manipulate the open banking propositions into the wider or broader market. But I think it has been a fear that Jim's point about a vibrant market, a vibrant competition and marketplace in payments, all of a sudden, becomes a lot less vibrant because the incumbents effectively snap up the best of breed that's out there. Any thoughts out there on that one?
Yeah, I mean, let me respond. I'm sure others will have a view as well. I mean, I think it's kind of a false choice in the sense that there's room for both fintechs and incumbents, and we're seeing both fintechs and incumbents out there using open banking and other sort of similar new capabilities to build interesting new propositions. But we absolutely also see the two partnering together in more or less explicit ways. So yes, fintechs will take market share, but they'll take share of what is ultimately a growing pipe. I mean, going back to the poll question, regardless of how quickly one moves from, if you like, paper and cash transactions to various forms of electronic, it's clearly true that even in the most developed payment markets in the world, in the Nordics, there's still a bit of cash knocking around, and in most markets, cash is still the dominant payment instrument in terms of number of transactions. So there's a huge pie to get, huge kind of share to go for, if you like. And it's clear that one of the things, if you like, from an industry perspective, one of the benefits, I guess, of the pandemic has been to catalyze further shift of that balance from paper to digital transactions, and both fintechs and banks can benefit from that.
Okay, thanks, Jim. Lee, we're gonna move on. We've got a couple more key topics to discuss, so we're gonna just move on to those a little bit. And from your perspective as an incumbent bank, we'd like you to kick off on the topic of scale. So we've discussed how the incumbents have millions of customers and huge volumes, but the digital payments are poised for significant increases. What kind of pressure does this put on an incumbent, or can you leverage and build on the scale advantage, given the discussions we've just been having around the the fintechs and the competition versus partner?
Okay, just to I know you said to move on, Alex, but I know you said to very briefly touch on that last question. I think fintechs have already gained market share and scale. PayPal was a fintech, TransferWise, or Wise as it was now, was a fintech. So I think it's almost folly to either look at it as they can't or they won't. And then the question then comes to partnerships and the opportunities from a partnership perspective. Look at Apple in America with Goldman Sachs. Look at Google and Plex. There is, yes, they are big techs, but there are opportunities to kind of coexist, and it's about collaboration to success. From a scale perspective, yes, it brings challenges. Yes, it brings opportunities. And I mentioned it earlier regarding the kind of responsibility that our scale brings. So despite that continued growth, we still have that responsibility to meet our full range of kind of customer needs. But because a lot of the conversation has gone to open banking, I'll probably focus on that as an example to bring it to life. So obviously the CMA mandated us all as one of the largest banks to make certain provisions to open up our data and our accounts. But we decided to actually set out a vision at that point across the bank to be an open API enabled bank, to be a marketplace collaborator, and actually looking at that reg change and thinking, yes, this is a significant regulatory change that we firstly have to meet, we're required to, but actually how can we use it to benefit the customer and potentially commercially benefit ourselves in other avenues as well, with the threat that it was bringing. Now, the challenge our scale brings is that it's still a significant investment ask. So securing funding for innovation on top of what is a regulatory or mandated change is, let's be honest, never a straightforward ask, no matter how innovative your culture, your mindset, and your kind of exco. But we've done it. And we're now the most consistently performing incumbent bank from an API perspective. We've been voted as kind of like fintech friendly by FData, the first to pass the CMA mandated usability standards. We were kind of right first time when some had to build again. So we've set out those core principles, which links to the fintech piece. We are an open collaborator. Fintechs can come and use our APIs whenever they want to. Big techs can whenever they want to. Simple onboarding, proven value, customer at the heart with that user-friendly kind of attitude. We were the first major UK bank to offer faster payments clearing via an API for financial institutions. We were the first major bank to do the merchant proposition I mentioned earlier called Pay It. So scale brings challenge, but I think we've proved that it brings opportunity as well.
Thanks, Lee. And just while we've been chatting there, it's a timely question on scale, and one of the audience members has asked very simply, will EPI be successful? I know where I'd point the question, but I'll offer it to anyone that wants to take it on. And if none of you unmute yourself, I'll know to move on pretty quickly.
This is potentially one for Jim as well, with the kind of roots of what EPI is, but will EPI be successful? So obviously we're assessing EPI. We are UK and currently Ireland focused, but still globally in our transaction base, and SEPA is a big part of our kind of go forward strategy. EPI is one we are kind of watching closely. There are comparisons globally with where a account to account based proposition has worked to challenge the kind of incumbent card scheme. So be interested on Jim's view here. Probably too early to tell exactly now to answer that question, but it's certainly one we are involved in quite closely.
Simon, looks like you've got your mic unmuted, so you're ready to go.
Yeah, just briefly, but I think I'd agree with Lee. It's too early to tell, but I think of all the initiatives that Europe has launched, this feels like it has more weight and chance of succeeding than any of the previous. I think there are a number of challenges for it to overcome in terms of actually getting that adoption from a user base, and and offering the services that will get that adoption. And there are some pretty strong incumbents if you look at the Nordics, particularly, where you're going to have to provide a compelling proposition to get things to change. So the level of co-branding and partnership and recognition that there is an existing ecosystem in which it needs to operate will be absolutely key to its gradual success rather than instant success. It would be my comment.
Thank you. I know I shouldn't add because I'm the host, but from my perspective, it sounds wonderful and looks great. To your point, Simon, the names in there are great, but sometimes I look at the levels of investment that the likes of Visa and MasterCard put into the networks, even at a European level, and I just wonder, whether the pockets are deep enough to support that, and you've got to start small. I appreciate that, but they've got some pretty big boots to fill. So anyway, we've sort of discussed scale, and let's move on to cost. And Simon, I'll stay with you if I may, because I think from your perspective of selling into these companies, let's start with a stat. Less than 10% of technology spend at an average bank increases value-added business functionality. How can banks deliver long-term value through technology transformation? How do you deal with that question? Because I guess they asked you.
Yeah, and I think the answer is crudely to transform. Now, one of the reasons that figure is unfortunately so low is the 90% kind of goes on, or something like that. I think goes on regulatory kind of driven rather than client driven. Bringing those two things together so that they're not diametrically, well, not necessarily opposed, but kind of individual, I think is important in terms of strategic thinking. But if I compare banks' investment overall as a share of operational cost to that of some of the gaffers like Amazon, I think it's 13%, Alphabet, it's roughly 19%. Banks is anywhere between, big banks, anywhere between 17 and 30%. And I think, the challenge for banks is how do they deal with the regulation and the legacy environment and create enough headroom to really invest in the stuff that they want to strategically from a customer value perspective outside of regulation. And I'm sure Lee will have a sharp perspective on this particularly, but it's trying to get out of the catch-22 and move to leverage new technology with open source, cloud native, a much more flexible, service-oriented kind of approach to things. And in that change, it's not just as simple as, there's a technical challenge. There's the cultural challenge, there's the skills challenge, all of those sort of things, to overcome, which obviously is the kind of stuff we work with our clients on.
Lee, anything to add quickly?
Yeah, I mean, it's a melting pot of challenges that kind of all comes together, right? If you speak to our CTO in payments, it's arguably like meeting mandated changes, like doing heart and lung surgery on someone who's trying to deliver a presentation at the same time. It's especially for our kind of scale, it becomes nigh on impossible. And then to Simon's point, you're then trying to innovate and value add at exactly the same time. But you do need to keep drive that culture. Has to be, how do we deliver value add for the customer whilst we transform, whilst we meet mandated change? I mean, I used the open banking example then, where we've actually from the outset taken a innovative and differentiated view on mandated change. ISO will equally be the same. How do we, whilst we've got an age-old analogy, right? But whilst we've got the bonnet up, how do we make improvements to the car whilst we're doing it? And arguably the car's still driving at 100 miles an hour down the motorway. So it is a constant challenge, of which there are kind of many facets, but you have to keep enforcing that culture and that mindset.
Yeah, I mean, I agree with what's just been said. I mean, I think, somebody touched on cloud just now. If we were having this conversation even 3 years ago, there would be, lots of, sucking of teeth and skepticism and so on. And that's not a conversation anymore. In most financial institutions, it's gone from this kind of slightly weird thing that people are a bit skeptical about to becoming, yeah, well, of course we do for the right sets of services. That's an incredibly short time window in our industry for just such a huge mindset shift. And I think, and that is, reflective of how quickly that kind of combined presentation whilst doing heart and lung surgery thing can be addressed and is being addressed by, some very large institutions with some very large customer bases and some very big responsibilities. So, I think, the pace of change is just hugely impressive. And the industry is in good shape in that regard.
Thanks, Jim. Okay, so by complete luck as opposed to judgment, we've got exactly 3 minutes left, which means you've each got 1 minute on the final question, which is we've discussed what the future, we've discussed what the landscape looks like now, and we've been through all of the various topics within it. What does the competitive landscape for payments look like in 5 years? That's for you, Jim. Sorry to kick off, please.
Sure. Ever more dynamic. The pace of change is, as we were just discussing, is massive. That's going to accelerate. I think the other thing that will happen is that kind of, regardless of things like Brexit or whatever else, borders will become increasingly less important. People can be based in all sorts of places to deliver all sorts of services. So I think that dimension to it as well. I mean, Simon touched on the complexities for an Airbnb. The providers who can fix those problems in a seamless way for payers and payees, whether they're based in the UK or in the Bahamas or wherever they happen to be, will be, hugely successful, because there's just going to be more and more and more sophistication and complexity that has to be handled and put into the background.
Thanks, Jim. Lee, anything to add?
Yeah, big question. I think the drivers aren't going to change. I think payments will be further embedded in our everyday lives. I guess the question for us is what role do banks play in that? I think more and more we'll see payments facilitated by non-FS providers, and that battle for the customer will be right across the value chain. And to my point earlier, we'll still have the responsibility of, especially as an incumbent, managing those that are kind of non-digitally active. 5 years is, yes, it's a long time, but at the same time, it's a short time. So I don't think we'll be cashless. I just think it will be kind of less cash. And I think we'll see more collaboration and partnership. The industry has to work better together, whether it's RTGS renewal, new payments architecture, to the point earlier, partnerships with fintechs. We have to work together and continue to kind of drive out the bad actors, which you've not even touched upon throughout this entire conversation. Those that want to do the customer harm, we have to work together to go against. So I think they're probably the 4 or 5 top things for me.
Thanks, Lee. And Simon, over to you, please, for the final words and wrap up.
In one word, I'd say empowerment, and that's whether the players, new and old, are empowered by new technology to serve customers better, whether that's the regulators empowering people more in terms of data and much more of an open finance environment through which everyone can thrive, or whether that's empowered in terms of us as clients, corporates, individuals, to be able to do things much more flexibly and personalised and easily. And I think whether that's 5 years or 10 years, that's the direction which we're all heading in, and it's pretty exciting.
Thank you, Simon. Thanks for that. Okay, so from my perspective, I want to thank Jim, Simon, and Lee for being very open and honest in the answers. I think that's been a thoroughly interesting discussion. We've covered an awful lot of ground. Thank you to members of the audience that asked your questions. There's a couple we didn't get around to, so I can only apologise for that. The good news is we do collect all the questions, and I'm sure that someone from one of the members of the teams on here will come back to you as who's most appropriate. But for the time being, thank you all very much for joining today. Once again, thanks to the panelists, thanks to Icon for the support, and look forward to speaking to you all again soon.
Thank you.
Thank you.